Hello, everybody. It's Greg Harrelson here with Century 21, the Harrelson Group, of course, in Myrtle Beach, South Carolina. And as you may know, I do specialize in working condos all along the Grand Strand, whether they're golf course condos, oceanfront condos, ocean view condos, or just condos in general along the Grand Strand. I've been selling them and helping owners, either sell them or helping buyers purchase them for probably the last 25, 27 years. I don't know if you've heard yet, but there's a lot of rumble, a lot of conversation about insurance cost on these condo buildings through the HOAs have been skyrocketing. So again, some of you may be hearing this for the first time. I know most of you are absentee owners, so you're not in the local real estate market. But yes, it is true that there have been buildings that have had to renew their insurance. And when they renew their insurance, the insurance premiums, the cost of that insurance has went through the roof. I can give you just a quick example of a building that's in Myrtle Beach that just last week, I got a call from a homeowner, and the average insurance cost for their unit in that particular building was $2,600. And unfortunately, the building had to renew their insurance, and the premium renewal was going to go up to $5,600 per unit. So it went from $2,600 to $5,600 per unit. That's over a 100% increase in the cost of insurance. So, again, if you have not heard about this, it's probably because your building has not come up for renewal yet, and maybe that conversation is not going on. But it's very rare. I have not seen a building that has been up for renewal that has not dealt with some variation of increased insurance costs. So if you have not heard anything, that's great. But I do recommend, for planning purposes, I do recommend that you talk to your HOA and just ask them, hey, are we anticipating insurance to go up? Do we have money in the budget if our insurance costs go up? Because the reason why you want to know this is in the scenarios, that example that I just shared with you, they did not have that in the budget. The HOA, this is kind of blindsiding a lot of owners. It's blindsiding the boards. It's kind of something that they didn't anticipate. So they didn't plan for this in the budget. And the only way that they're able to absorb this expense is by raising HOAs and or doing a special assessment. I know some buildings have done a combination of both. Some of them have done one versus the other, but that's really what's going on. So this video is really to just inform you that there is something brewing in our marketplace. I'm not trying to alarm you, but I'm trying to prepare you. Hey, go and investigate for your particular building and find out what's going on. I get this question, Greg, why are these costs going up? What's going on? And I wrote down a few reasons. First off, one of the reasons is there's been a lot of extreme weather events across the country, not just in Myrtle Beach. We've been lucky, knock on wood, we've been lucky that we haven't had any significant hurricanes in a while, but Florida's had some significant hurricanes. There's been flooding throughout California and in Texas, all different areas. Tornadoes have hit. There seem to be a lot of extreme weather events that have hit in the last year to maybe 2 years. And in insurance carriers, they don't just focus on Myrtle Beach. They focus usually around the United States. And if they're getting hit really hard with increased claims and losses in one area, they raise their premiums in all areas. So we've just been hearing that insurance companies have had increased claims and increased losses, and a lot of them have to raise premiums to make sure that they have the money to be able to pay out all those claims to their policyholders. The second thing is there's been a significant increase or rise in construction costs. So, though like 10 years ago, it would cost X amount of dollars to build the condo building or to do a repair, it would cost X. Well, today it costs X plus. So their insurance companies are raising their premiums to make sure that when they have a payout, a claim against the building that they have to pay out, that they can afford to pay out based on today's repair or replacement costs, the construction costs. And because, again, those constructions of costs have increased, they are increasing their premiums. That's just another factor. Another one, and this is a big one, there are probably nearly 20 insurance carriers that have pulled out of our market, out of the Myrtle Beach, the coastal market of the Grand Strand. They've pulled out and they've said, hey, look, we're no longer going to write insurance. And every time, like there's buildings or there's even homes where they have insurance policies that when they come up for renewal, they won't renew them. They're saying, hey, we're not going to renew. We're no longer going to write insurance in this market because of the risk and the high risk of payouts. We're just going to focus on lower risk markets. So there's been about 20 carriers that have pulled out of our market. In addition to that, there's been 5 or 6 that have become solvent. They're going out of business because their debts that they owe are higher than what the income that they're bringing in, the premiums they're bringing in. And so they just cannot write any more policies. So, maybe there's 20 to 25 carriers that no longer exist. So think of supply and demand. The few carriers there are in our market, then the higher the premiums are in our market for the remaining people that are taking on these policies. So those are like 3 things that we know that are going on with certainty that's impacting these higher costs. Again, I have always focused on for years. You've probably received emails from me in the past, maybe seen other videos. My goal is to be a resource for you. A resource of information. So if you need something, you reach out, give me a call, or you just watch videos like this, and I'm going to share with you what's going on in the current real estate market, especially revolving around condos right now. This is not a video to alarm you. I don't want you to have fear, but I want you to be prepared, because some of the owners in these buildings have just gotten a letter saying, hey, this is a new assessment because of the insurance costs, and they weren't prepared. If you haven't gotten that letter yet, hopefully you never do, but call your HOA. So if it's going to be coming up in 6 months, in 4 months, if that's what you find out, then at least you can be prepared and you won't be shocked or disappointed when you see that letter in the event that you were to get that letter. And then, of course, I do anticipate that there are going to be some people that are just going to throw in the towel and say, these expenses keep going up. I can't afford the HOA fees or any more assessments. I'm just going to sell. I don't think this should be a reason why somebody sells insurance costs. But if you ever do find yourself in a position where you think it's time to sell, I would love to talk with you. Again, because I know what's going on, I also know how to navigate this market and make sure you still get a high price for your condo. If you're not going to sell, fantastic. That's perfect too. That's a personal choice. And I'm not saying that people should sell, but if you're going to hang out and hold, but you would like to have some additional information on what's going on with the condo market, then feel free to reach out to me. Even though I know you're not doing anything, I'd be glad to establish a relationship and give you some information. Again, I'm Greg Harrelson, Century 21, the Harrelson Group. I hope you found this information very helpful. Talk to you soon.